Don't feel it there. I feel we have one more wave to go, which is here. This guy. This is what I'm waiting for. It's either between wave 3 or wave 5. So that's what I'm waiting for. If it's going to be this, pull up and come down.
Excuse me. Let's go back to the other theory. You notice between
shoulder pattern, which is showing, is
that's what I'm saying.
if the market goes this high, this is a shoulder, your left shoulder and right shoulder. So if you want to know how this is complete, when this line, this low and this low, right? You draw a trend line. You draw a trend line. That trend line is called the neckline. If you want to predict the price that stock is going to drop, you are going to minus here to here to give you the next line. Those ones are higher technical analysis.
So we are based on first income.
All these things mean something. All these things mean it. Every stick tells you a story. Every stick says a story. And what this one says is, as I said, when you see a white candle or a green candle, that's a bull trend. That means what happened that the market came this low, it opened at this price and closed here. This was a full candle. That means if, like our market, there are some stocks that do 10 or 5% maximum in a day, up or down. So when you see a full candle like this, with whether up or down, that means the stock gained full 5% that day. And when you see things like this, on the downtrend, that means the market went this high, it opened here, it went this high, but closed around here. That's why it's showing this candlestick. So what this one is saying is, this is a bear candlestick and this is a bull candlestick. They share the same characteristics. That's the same low, the same high. The only difference is on the black candle, this is the close, and the white candle, this is the close. That means if you look at that means market closed low for the day. If it's black candle, it closed low, then it closed high. So bearish, bullish. And how do we use these candlesticks? From what I gave you, we have different types. But
yes, yesterday's close.
Yes.
Today's open.
Yes, sometimes.
Is there any time?
No, at times the price might close 2 naira. The when it's opening the next day. You know, it's the first trade that triggers. It might not trigger 205 the next day, or it might just start from the 2 naira. So depending on the price that closed for the next day. Yeah. So this white, that's the, you see this one in the chart. That's a full candlestick. That means it was a bullish day that the market was bullish. Then if you see the next one, which is black, that means the black candlestick. That means the market was very, it was negative that day. The third one, it's white opening marigold. That was quite. That one was that the market went that high. It went that high, but closed here. So I'll say this was a profit taking here. Then this place, what happened was that the market came this low, people bought and closed it high here. It was a good day. Like people that bought low and they sold then the same thing with this one too. The market went this high, this same high. It opened here, it went this high, but they closed it down here. So all you have to have an idea from how those things. If that is the close from the flag, there was no low for that day. So you cannot. So this one we call it the hammer. This is hammer. This is inverted hammer, upside down hammer. So upside down hammer is that the market closed down for that day. Then this one too, number 6. Another good day, kind of, but yeah, quite negative because market went that high, but still closed low. It went down because the stretch. It went to the topmost, went to the highs, and closed in the middle. Then number 7, we call it the white candle. That's market direction. We don't know whether it wants to go up or it wants to come down. These are the kind of things you might see in some stocks like Fidelity. But what we are seeing in Fidelity now is number 9, number 10, number 11, number 12. They are called dojis. Look at them in Fidelity. You can see them. You can see all those things. You see them? Those are the candlesticks that we are seeing now. You see them? And what do they tell us? The number 11, they call it. See, there are different names. Dragon's Fly, Doji. That is no direction, no direction. So we don't know where. As you said, we don't know where the market is going. That's why you are seeing that candle. So, even looking at the candlestick, it will, if you know how to read those candles, it will give you an idea of what stock is doing. This one, this one, this one, this one. In the indecision. Number 14 and 15 is okay. There's a difference between the hammer and the hanging man. The funny names, the Chinese names are even funny, and the Japanese names are funny, you know. So they have different. Every candlestick you are seeing here, we have them here. It's like, let the candlestick be your dictionary. You cram it. Every stuff you look at, you have an idea. Everything tells you a story. You see this one here? Huh? You see this one was in this. You see this one here? It's here. That's, you can say within small black.
Number 8.
Yeah, number 8, right?
No direction.
No direction. Then the next day we saw something like this. So what Zenith is doing here is it came this low. This was the lowest. It went high but closed here. So it's still signs of indecision. There's trending. We see all those. Let's see a trending market. Let me see very good trending market. Which market really trends? Let me see access. Okay, MBL is. You see up, down. You see that full one we discussed about, that full candle, full 5% down. All these ones are signs of indecision or reversal. Anytime you see these trends, let's say the stock is going up. Anytime you see something like this, that means possibility that the market is going to change. Yes, power is changing hands. They're looking tired. So that's where you see, they call them dojis. Like they said those days when the Chinese were trading in the US market, because the US market they use line chart and bar chart. So when the Japanese were trading, they were trading in the US market, they were the ones making money. And next thing, they said the Chinese guy, the Japanese were shout, doji, 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 doji. That means reversal. That is sell. So the US guys didn't know what they were talking about. Doji meant beware of the hand. Something's going to happen. So that's what doji does. Every time you see a doji in any trend, either going up or down, you always appear. That means there's going to be a reversal on that trend. So all the these are the 15 for now. You can know they have different names. You can assimilate them at your own time. Psychological background. These are rising power, weakening rising power, increasing rising power, falling power, increasing falling power, weakening power, upper and lower. That's rising power, these three, or this one. In fact, to make it easier, anytime you see a candle on top, you see that candle on top. What happened that day was that the market got up or it came down. Anytime you see it under, that means it came low, but they were able to push the market up. These are reversal signals. So all these ones I don't think I need to explain these ones. They are there in your manuscript. So I will go, but what we need to do is we need to start using those indicators which I told you about. And the first indicator is your RSI. RSI. All the way we talking about prices, moving averages, we are now looking at let's say this has been your rice. This is it for it to blend. So what RSI represents is called relative strength index. And it's an oscillator that is used to measure the rate of change in price. It compares market up days and market down days within the specified period, and index is the result between 0 to 100. The result is over X period. How many days finished with closing price above previous day compared to how many days finished with the closing price below previous day. People who use RSI often use 30 to 70 as triggers for oversold and overbought levels. Now, I said market was overheating. Let me show you why I use that statement.
I'm on just show us. I want to see myself. Who's claiming about what? I don't know.
He told us we trade RSI between 30 and 70. That's how I trade RSI. 30 and 70, and from my chart here, this is RSI. So let's say we draw those two lines. 30, this is 30, and this is 70. This was when I said shouting. Yeah. You see all these places? These are excesses. Well, see, there are two ways of analyzing RSI. What I've given you is the layman's own that people without the simple rule that okay, if RSI is 30, you buy. If it's here, you sell. But see, one thing that people don't know that when RSI trades above 70, which is what I saw there, it shows the bulls are still strong. That's in the chart. The market is just building momentum. That the market is still very strong. And anything above those trends, you start seeing. You see, it was when market was above this, we saw all these rallies coming up. And if you are doing 70-30, by here, by this time, I've been out of the market. Use price. Some people just trend only RSI. 70-30. You have to look at a particular stock and know you need to know how the RSI trades. Apart from index, let's say we're looking at First Bank. First Bank. What is the trend of First Bank? You see RSI is very low, right? How does First Bank trade? Let's go back to historical. Let me draw my trend line. 36. It bounces back. These are 36, it bounces back. Now let's say, what is the resistance for RSI within that period? Okay, let's say for the period of May till about July. Enter and draw lines. Even on your RSI, I'm drawing trend lines. So at any point in time, if I was buying and selling here, immediately RSI broke to 70. But information tells us 30. Information tells us 30 to 70. But that doesn't mean you should sell. It gives you a safe in and out range. But anytime you see high RSI giving you high readings, they give you high readings, that's when you see the best book. And immediately they fall below, get out. Even the RSI, it was acting as support line here. This place and this place until it broke out. And when it broke out, the same trend with this one, this place too. The same trend here. On my 5-day moving average. I'm on my 15-day moving average. If you are moving moving average, just moving average, I was bullish until I got here, I was out. Like now, I'm supposed to buy first bar for my client. I've not bought. Because for me, it's trading below this trend. Until I see it. One thing I know about first bank that historical. Anytime first bank gets, in fact, historical, when you see blue chip stocks within these down rallies, it's a good buy. It's a good buy. And, I know it's not. Anytime you hit these lines, anything within these lines, buy.
That's the support line.
And what will be the price there?
No, I'm not there. Look at, let me give you this way. It's not price. The RSI, what the RSI is reading there. Because there was a time I wrote, I said, anytime you see stocks trading, anytime you see blue chip stocks trading 1920 RSI, buy.
It seems they didn't understand the definition of RSI. That's why I asked that question. If you understood it, you would have been able to know it's not.
Okay, I said no. You see, the layman explanation for RSI that RSI trades between 30 to 70. It cannot go below 0, it cannot go above 100. It cannot go below 0, it cannot trade above 100. And a lot of people that trade even Forex, because of this analysis, some people put 2080. You can decide which band you want to trade. You can decide what band you want to trade. If you want to trade, even if you want to trade 60-40, the smaller band you can trade. But what I'm trying to say that they tell you RSI is 30-70 or 20-80. No. You have to look at the character of that stock. Where are the best period to buy that stock? No matter how they fall. And I've said for blue chip stocks, anytime they get about 1920. From the analysis I've done about the market, from 2005 till date, anytime our RSIs are between 1920, it's always a good buy. You just have to wait, but it's always a good buy. If you look at some stuff like MBL, there are some stocks that they have high RSIs. Okay, look at MBL did.
Momoh, can I just
okay. Price of a security to the lowest low, highest high over a given period. The resultant figure is called K percentage and is displayed as a solid line. The D percentage, which is a 3-day simple moving average of K, is often used as a slow stochastic basis of crossover signals. Really, you saw this English? I don't look at it. Let me tell you what I look at. I look at the behavior, because if you tell me what makes up the stochastic so percentage, I don't. Just look at the power of stochastics, how it works. Stochastics, sorry, what I want to say next. What stochastic does is it trends. Anytime you see crossovers of stochastics, it gives you a buy and a sell signal. Let me make it a smooth stochastic. Anytime you see a crossover within this period, most of them give you a buy or a sell signal. And the way it works is, if you want to know a bullish stochastics, when they are trending high, this is a bull stochastic. That means it's trending higher. I mean, it's trending being a very high point. And at this period, it gives you a buy and a sell signal within this area. That's why you are seeing all these high spikes. Anything below this is a low stochastic. So they are more like turning points at any point in time for any stock. That is stochastic on your NSE-ASI. It's giving you a sell signal. These were the high points of the market. You saw how high the thing was. So it spikes, it moves leading way. So at any point in time you see a crossover in your stochastics, it gives you a buy and a sell signal. Okay, I'll be giving time to find an indicator that is often used to identify entry and exit points, including stop loss and trading stop loss. The way this trend works, it's very, 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 very simple. All the grammars I've been saying since morning, if you use your SARS, all it does is access. All it does is that line. All those lines you are seeing. So even without looking at, if you want to trade only the dots, the way you see dots down above, that is price above dots, is a buy signal. Enter and see is a sell signal. So on access, that's a buy signal, a sell signal, and a buy. It can just give me a buy. So looking at the dots alone, anytime you see those dots, any stock you want to analyze, I will tell you straight up, buy or sell. Any stock. This is the lazy man way of trading. But not that you are making, you are not losing money, you won't lose much and you won't gain more. Look at this is GT. It's still a buy. You see the blue line? It's a buy. So if you're trading using only this one, it tells you when you're supposed to be in or out of the market.
How about on transport?
All these personal stocks. Transport is a buy. It's a buy. But it's what I'm trying to tell you that if I was to trade those moving averages which I told you about, by here I'll be out of transport. Okay. Yeah, but SARS was here, from here it was out. And gave me a buy here. But for me, I'm not into transport yet until transport goes above that line. But SARS gives you, when it feels you are safe in the market. It's like a safe way of trading. At any point in time, price is below, it's a buy, it's a sell, buy, sell. So that's how SARS works.
How about your favorite movie? Have you got
I won't say it's the same thing as SARS, but Bollinger Band is like a band. It guides, it's like an egg. It's like an egg. The yolk is the casing of pricing. It gives you an idea where prices are trending. It covers like what. So when you start seeing the bands getting tighter, you know as I told you that prices move within bands. You make those bands start getting tighter and tighter. Expect a breakout. So from what you are seeing in transport now, the transport bands are getting smaller and smaller. It gets to an extent, it jokes and it breaks out. So that's what we are seeing on transport now. That band is getting slimmer and slimmer.
Excuse me.
Yeah, what I did on the index is that it was recently because candlesticks works with open, high, low, close. So it was recently I started putting my open, it's only line I always put on my NSE. But if you look at it from a weekly time frame, this is your NSE. That's the bands for your NSE. I wish they were doing it. They don't do it. They have it, but they don't do it in Nigeria. They're supposed to be doing it, but they don't do it in Nigeria. The histogram. I think this is my last one. Yes, this is the main one. It's a lagging indicator.
Listen to this one well.
Right. Well, no, I'm not. It's a lagging indicator, but I like it for one thing. It gives me an idea. Apart from all the drama that the way you have to read, right? But what I the way I trade it for a very simple. What I do for my MACD is MACD MACD gives you, it's almost like stochastics too. They wave up and down, you know. They give you time to buy, time to sell, and everything. You understand? But why I like this guy?
It's very simple.
Why I like this guy is that those lines, from the way I explain to myself, is those lines. Anytime you start seeing these lines shrink, right? When they start shrinking, momentum is going down. Even when the market is coming down, let's say market is coming down, then it now goes flat. MACD, like you told me of fidelity. Let me check fidelity on MACD. This MACD on fidelity. You can see that the bulls here is thinning out. It works with negative. This negative, this positive. So from a negative position, the bulls are coming up slowly. They are coming up slowly. Slowly. You understand? It's coming as though with time there might be a change in it. But what is that? This guy is almost getting to that 0 point, and in time it changes, market will move. Even when the index dropped, MACD confirmed this. But the market was still going up, right? To this line. You see, MACD histogram was already coming down. And look at markets. Market was still going up here. It was still looking strong here. But MACD had already crossed over. It crossed over here. So if I went to sell, I take out my position at 27,219. You see, MACD has started to sell. You see, now the market is flat. Eh? The market is flat. See what MACD is doing again. It's coming up slowly. It's coming up slow. That means the bulls are coming in. They're coming in. Now, why I said I was scared, I'm scared of the market. He's looking at the market from another time frame. You see it's coming down. It's coming down. That's why I'm scared of the market. I'm waiting.
Which time frame is this? Which time frame?
This is weekly time frame.
The other one is
Daily time frame.
Give me the big one.
Because you see what he's doing. That's why I find that the bulls are coming. The bears too are fighting in another time frame.
Okay, give the biggest one, the bigger one.
It must not cross down.
Give me the monthly one.
This is the monthly one. The monthly one is going up.
I need to be this year is not there. December my own
I'm sorry to say, I think that's the end of today's listen on technical analysis. So if you have any questions, the blog, if you go into this blog, you see a lot of things. I talk about the market in a technical way. I'm not a fundamental guy. I see it from a technical view, and I don't know if I'm the only one. I know there are few, but if you see most.
I think no one has been introduced for now. I'm here to represent Malga, who both work for digital security. It was once my MD. It's okay, like it was once my MD, but I think he has a tight schedule for this Saturday, so I'm here to represent him. The last speaker, or the MC, really introduced me very well because he really mentioned my first name. My full name is Olawale Balogun. I'm an associate member of the ICANN, CIS, tax, as well as the SCCA. UK. I'm also a CFA level 2 candidate. So it's my pleasure to be in front of you this morning to deliver the topic about capital markets, that investing in the Netherlands and budget of 2013. The only thing you'll be missing is that Mr. Awozo is an old man, he's not here, and you are seeing a young man here. You'll not be missing much. What you'll be missing is just about his experience. Because old people, they come with experience, while young ones come with innovation. On Nigeria Stock Exchange, for retail investors, for investors with 1 million, 500,000, you can go there and buy. What's the essence? It's for you to reduce the risk. Exposure all these initiatives to investors. They will simply look at what I'm expecting from this market. An overview of what happened over the past, how many months now? It should be 10 months. Looking at 10 months. That's happened in that area. Nothing much has happened. Our market has recorded tremendous performance starting from June, even July. Sorry, starting from July. The market was stable from January to June for stability. The growth was not much. But from July, there was improved performance. As at the end of October, we realized that our market is even leading other global markets in the world. South Africa, we have the highest here. At the end of October, the return to date at the end of October was like 29%. And what are the factors responsible for this growth? These are the initiatives embarked upon by NSE. The market making started in July, and this had tremendous growth on our market. Market making, what is their benefit? They are meant to provide liquidity. Liquidity in what sense? Look at the era of 20 when there was a global meltdown. That was the period of 2008. People could not sell. Investors are rushing to sell. Every day the stock prices are what? Coming down. Someone that invested 10 million in the market only realized 500,000. There was a problem then in the market that was not known to everybody. And another thing I discovered then that most of the operators, their research unit or department was not that robust.